What's up, guys? It's me, Moonin Papa, and you're watching my live stream here on YouTube. Before I get started, we got to get to the fun stuff, and then we get into the really good stuff. This content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. The Better Traders is not a broker-dealer. We are not an investment advisor. We have no access to non-public information about publicly traded companies or cryptocurrencies. And this is not a place for the giving or receiving of financial advice, advice concerning investment decisions, or tax or legal advice. The value of investments and the income derived from them can go down as well as up. Investors may not get back the amount they invested, and past performance is not a guide to future performance. How's everybody doing out there? It's good to see you. We're going to be jumping into the charts and all that stuff. I apologize because I was supposed to do a live stream last week in Dubai. And honestly, if I wasn't at the convention center for the Future Blockchain Summit during the day, I was in meetings or at dinners or at meetups like every single night. So when Thursday came and went, I was like, oh, I was supposed to have a live stream today. Whoops. So I am supposed to have this every single week on this time at Thursday, it's my Thursday, Japan time, which is 11 a.m., which would be Wednesday night, East Coast time, like New York, 10 p.m., and that'd be 7 p.m. West Coast time, which would be like LA. So this is the only one I have right now just because I've been busy and I've been away. But every single week at this time, except for last week, I have a live stream. So the whole point of the live stream is just to talk about what I see happen in the markets, talk about mainly Bitcoin price action, stuff like that, and if there's any notable news or anything of that nature. So the whole thing I'm going to be talking about today in this live stream is really just talking about the charts, talking about Bitcoin's boring price action, but helping you to understand that boring price action doesn't mean that you ignore it. Like, there's a lot happening in the background. Glassnode just posted a video yesterday that I thought was fantastic timing, saying that Bitcoin is coiled, it's springed, and it's ready to explode. We're just waiting to see what will happen next. So let's go ahead and jump over here to TradingView. So I have a couple of charts that I want to go over, the same ones pretty much as always, except I have two extra ones, and I'll explain why in a minute. So first, we're going to start off with BTC. And yes, I am using the browser because I tried to open up TradingView, the app on this computer, and it says you have to update the app, but it won't let me log in. So anyway, I'm going to use the browser, and that's what we're going to be doing. That's going to be just fine. So looking at BTC's price action, it's doing a whole lot of what I said it'd be doing, which is a whole lot of nothing, going sideways, right? So ever since this popped, I said, well, I expect us to kind of just range sideways for a long time. The reason though why things have been really compressed is because of this big trend line. So this trend line was originally drawn over here, and then it was broken above, and then it was here, and then it was broken above. Actually, right now we're quote unquote above this trend line, but like weekly so. It's not even that amazing. It's not even that good. So really we're looking at here. We're just going to keep drawing this out and drawing this out. So in essence, we are above the trend line, but there's no price action that says we're above the trend line. There really should be a positive breakout, and there isn't yet. So we saw an attempt at that 3 days ago, closing above and waking into it. Waking into it is not enough though. It really has to close into it. And I find it fascinating that it's just all of these attempts and it just keeps being pushed back down to this range of 19K. So again, really boring price action, but don't let that fool you. Just because the price action is boring and really tight doesn't mean that you go off and you look for other charts. Now I do have other charts that I am trading and looking at, but understand that I'm trying to be smart about that. I'm not trying to exhaust my funds, and I'm definitely not trying to overexpose myself to alts right now because things could happen real fast for BTC, historically speaking. So what am I talking about? Well, let me hide some of this stuff. There we go. And I'm going to go back over here. So anytime BTC is just moving super sideways, this is 2019, doing a whole lot of nothing, slowly crawling up, but doing a whole lot of nothing. There's a lot of energy building up right here. A lot of energy right here too. whole lot of nothing means that we're going to have a surprise 7, 8, 10% pump up or down. That's typically what we see whenever the price is super constricted, just like it is right now. Now, it's not the exact same as that time, the bottom of that bear market, but we do see these bursts of, well, essentially 7% or so over 2 days time, 8%. So we're seeing similar pumps, right? Excitement and then depression goes down. So if we go back even further and we look at this time, let's go back to the daily chart here. This is 2015. So looking at Bitcoin's price action here, lots of this up and down, up and down. But as soon as we start to do nothing for a while, it's going to make a move. It's going to have to, because the price just cannot sustain nothing forever. Like this price action right here is so boring. It's literally 10% for how many days? Almost a month, 24 days. So again, if we just zoom ahead to where we are right now, we've been in 10% for about 29 days. See what I'm talking about? So just because the price action is boring doesn't mean that we're staying here forever. We're not going to be in this horizontal range forever. So you have to keep that in mind. So if we also look at, well, other leading metrics like the S&P, which, surprise, surprise, SPX does not look good at all. I was surprised, to be honest, that it moved above. So I have this fib line drawing from back here, from the top to the drop, and it confirmed resistance there at the 618, and it broke below, and now it's above again. But still, I find it fascinating, not just for that, but also because we have this. Where's my horizontal line? Right here, it cracked below our support. And then this is our next line of support. So this last area of strong support is bad news. From where we are right now, that would be a drop of 7%, we'll say. So it's bad because anything that happens in the S&P is multiplied by 2 at least. So if Bitcoin were to make a drop of 14% from where it is right now, there we go, it'd be at 16.3. So bad in the sense that if the S&P is feeling weak, then it could fall down. One interesting point though about SPX, that chart, here we go, is that this chart, let me turn off the TBO so we can see it clearly. It's been having some wild rides, some big moves up. But again, keep in mind that this price, or not the price, but the index value, it is correlated to BTC's price, but Bitcoin's actually not reacting as much to the pumps and to the dumps, all that stuff, which I find comforting, to be honest. It's not as stable and, well, the moves aren't as small as gold, but it's much more stable than the S&P is right now, believe it or not. So how long is this going to last? It's going to last as long as it's going to last. I mean, there's no real answer to that other than just wait and see. So let's talk about some bullish and bearish scenarios. If Bitcoin were to make a bullish move up, for one, that would mean we'd have to break above this trend line, and then we would start looking for targets based off of our fib lines. Let me go back over here and just lay these on. So these are just our recent fib lines. So we would have immediate resistance here at 22. We would have resistance up here at 24, yada, yada, yada. It would take a whole lot though to really push up higher. I don't expect it just to shoot up in a straight green line like this. That'd be very unlikely. If that was the bullish scenario. So I'm not saying that we're going to go right up. It's going to take some time to go up higher. So the bearish outlook, on the other hand, is not so rosy as that's usually the case, right? If things are really, really going to be bearish, and let me do this. So I'm looking at these potential targets. So again, not too fantastic. I'm looking at 16, 13, 12, and 11. Now I know that this is really dramatic. This is our 14% drop. So it's right in line if S&P does drop down to that support. And again, to refresh your memory, it's that drop right there, that last area of strong support. That's a 7-ish% drop. Therefore, we're going to multiply that by 2 because Bitcoin does overreact typically. So that would mean a drop down here to 16, and that would break this low. One thing I'm certain of is that if we break this low, we're just going to keep dropping because confidence has been lost. However, if we drop and we retest that same price, notice that we still haven't yet. But if we do and we retest it and bounce, that'll make a double bottom. And having a double bottom would be great because that would show basically the bottom is in for certain. As far as technicals go, I'm not saying it's going to happen, but it's a possibility. And if the price does fall down to exactly, and this was what, 17.6? Yeah, 17,600 or so. If it bounces off of that, we're good. So let me talk about the but, the not so good part. The but part about all of this is that this is a super bearish setup, to be completely honest with you. Anytime that we see lower highs and we have a floor like this is bearish. It's a bearish wedge. One way to think about it is that we have way more touches to the downside to our support, and every single touch we have weakens it. It's much more probable for us to go down than it is for us to go up, given the shape of this chart. So I understand that, yeah, we could see Bitcoin move up. It's more likely to see it move down. Maybe it might do one of these little fake out things again. I don't know. But so far, it doesn't look bullish at all. To be honest, it looks pretty bearish. So what does that mean for everything else? Well, it means that I'll be approaching my bots and my trades differently. I still want to stack sats. I'm still going to be running bots, but favoring shorting instead of going long, obviously, if things were really going to be bearish. But if things turn bullish, then I'm gonna just wait. I'm gonna wait to participate in the market, honestly. So all this sideways action, I'm okay just waiting on the sidelines to see what BTC is gonna do, because it's not worth second guessing or trying to predict what's gonna happen. No matter how convincing some of these chart patterns look, this little wedge set up like this, no matter how convincing you may believe that the TA is and all that stuff, I'm just waiting. And the reason why I say that is because if I go back in time to here, this is what a lot of people that have been in crypto for a while, they don't want to revisit this. Bitcoin was in basically a 10% groove for 2 months, doing absolutely nothing. There were literally weeks of this. This is 12 days of 2% moves. Now keep in mind, at this same time, there were lots of charts that were pumping and going crazy. This is actually really good trading opportunities, but understand that as soon as Bitcoin starts to become extremely boring, pay attention. What we're used to seeing is stuff like this, where it's ranging, bouncing, all that stuff. We've seen lots of ranging, like this is good, this is great, yep, sure, and now we've just kind of flatlined. That's not good. So if things do end up being bearish and Bitcoin falls out and falls lower and lower and lower, that's okay. I got my short bots running. They're ready for that. But I don't have any spot long DCA bots running. I've turned off my main grid bot that I was running just because I want to see what happens. Because if Bitcoin does drop, that's not so good. But for smart trade and stuff like that, I am trading and trying to stack sats right now just because I know when Bitcoin's moving sideways, I can make some pretty decent profits. So one other thing that is important to keep an eye on that I have been looking at a lot is this, the DXY, or the US dollar currency index. We've been talking about this in the Better Traders Club for feels like months now. And in the live streams and maybe the update videos that I have on Mondays, I think I do. But this one, it cannot be ignored. The reason why it can't be ignored is that for a couple of reasons. The unfortunate truth is that the Dixie is in a very, very, very strong uptrend. Even though the RSI has been consistently overbought, everything above 70 right here, a majority of the time. And rarely have we seen it in the oversold area. It kind of dipped down here in January, but really the last time was last April. Keep in mind that Dixie at that time was 90, and now it's shot up 24% since then. The reason why I don't think this is going to slow down anytime soon is because the TBO, the whole purpose of this indicator is to tell us the strength of the trend. So when I have the fast line, which is this bright green, and then we have these varied lines here. There's a line right there, the medium fast, medium slow, and slow line. When I see all these pointing up like this, that's a super bullish trend. That's something you really just don't want to fight against. Now, there are things that we can look at though, like RSI, that will tell us when things are overbought, but just because it's overbought doesn't mean it's going to stop. So other things that I look at are Fibonacci lines, because these have these, Fibonacci lines give us projection points like the 272 and the 618. It actually hit this perfectly. I need to show you this just because some of you don't believe in TA for some reason. But when you know how to draw it, it's amazing that it literally hit this. Let's see, the high was 114.778. This is 114.784. So super close. And then this is typically a rejection point. But we can see that this isn't slowing down. It's not a good sign. Now, when we start to look at other Fibonacci lines, we start to layer, we can also see, oh, wait, there's a lot more happening here. There's this one that's from, let me get rid of this, from 1985. You're like, wait, what? Yes, we're going to use the monthly chart on the DXY just to show you. So from this peak to the trough, or not the trough, the trough, the valley, peak to the valley. So we've actually knocked into another fib line, which is great. So when we have these pretty close together, that's a nice point of resistance that we can consider. Just because it's resistance, though, doesn't mean it's going to stop. I mean, here was resistance. Here was resistance that was overlapped. It did have a little bit of a pullback first before it went higher, pullback before it went higher, pullback before it hopefully doesn't go higher. So the truth is that if the US dollar continues to be strong, that's going to punish and pummel the S&P, the traditional markets. It's going to destroy other currencies because for now, the US dollar is the world reserve currency. So if your currency is not as valuable as the dollar and you're using the dollar to make a lot of these transactions and trades in, your currency drops, just like we've seen with the euro, just like we're seeing with the yen. Again, those two currencies alone are the other two worlds. Sorry, we have three, really. There's a pocket of, or not a pocket, there's a basket of currencies that we look at together. And I mean, it's the dollar, it's the euro, it's the yen. And I mean, they're all falling except for the dollar. So no, Joe Biden, it's not everyone else's fault. It's the US dollar's fault that everything is crashing. So if the dollar continues to be bullish, then it destroys everything else, including the S&P and including Bitcoin. So now that we feel rosy and happy about this, right? The reality is that we could see a potential, a little bit of a pullback for the DXY. Granted, it has been crazy high. It shouldn't be this high at all. We shouldn't see the euro down here below $1. We shouldn't see, well, actually it'd be like this, JPY, USD. We shouldn't see the yen pummeled like this. This is incredibly irregular. Actually, I'm used to looking at, oh, sorry, like this. Like this is insane. So if you are coming to Japan and you're coming from the United States, you basically get 50% more yen for your dollar. So it means the yen has basically lost 50% of its value against the dollar ever since about here. So January 2021, it's shot up 46%. It's insanity. Look at how that's broken. This is just broken. So all this to say that the Dixie really is the culprit right here. So if it continues to move higher, other currencies are going to drop. S&P is going to drop because it can't keep up. It's going to hurt it. Bitcoin's certainly going to drop. So we just got to keep this in mind. That's why I'm being conservative with a lot of my trading right now. I am trading, but I'm being very conservative, and it's not an up-only market. It's not a buy the dip market right now. So I have these other two trading pairs here, but before I get to them and why they're there, I do want to remind you that this indicator, the TBO, is fantastic. It's a subscription-based indicator. You get it from the bettertraders.com. And we actually just rebranded our, like this. We rebranded everything for the Dubai Future Blockchain Summit. So the whole site looks amazing. It's fantastic. Done a good job. Still have to fix this though. Like crazy eyes. Like that's got to change. But anyway, the TBO it's showing you the strength of the trend, where there might be a possible change in the trend, all that kind of fun stuff. And if you need more support and you want more live streams like this, you want more content from me, I post on Twitter maybe like once a day. On my public server, I post once a week maybe. I'm doing most of my posting, most of my interaction on the Better Traders Club server, mainly because this is a subscription-based server. Last week I was super busy, so I wasn't posting as much, but we have tools, we have indicators, we have signals, we have all this stuff, live streams. There's a ton of stuff in this. So I highly recommend joining the Better Traders Club if you want more content. So let me get to these two. The reason why I'm sharing these two is these are actually trading pairs that were in the live stream from October 3rd. So 17 days ago or so. For me, 17 days. And don't worry about this. This is just a candidate for the future one. So CLV is here as an AB trading pair. The reason why it's here is because it has an amazing history. A chart like this, you don't ignore. So these are the kinds of things that I bring to your attention in the club and in the live streams. So this is actually when we had our live stream on, not the 4th, the 3rd. There we go. And this is all goofed up now because I messed up the date like that. So yes, even though the chart does fall, I mean, it pumped and it did exactly what I was planning on it would do. I mean, textbook. And the TBO, this is again why I love the TBO so much. It tells you where there's resistance. So it actually went and surpassed that. And look right here. It actually ran into resistance that's established by the TBO right there as well. So, I mean, hey, so this one trade, 80% or so, like fantastic. Even there at 36%, you don't find too many charts that are pumping 36%. And this one just pumping pretty consistently. I mean, this is, yeah, AB trading. I love it. And this other one I shared with the club on the 3rd as well. This one is Vite BTC. This one was what I consider to be a really good DCA bot candidate. And the reason why I wanted it, or the reason why I called it a good DCA bot candidate, is because this kind of chart, looking back over here, has all the kind of stuff I want to see. It just makes this nice, like swooping, oscillating kind of not design, but pattern. So like from here, it's just on a nice, steady, slow uptrend. And ever since the live stream, it's just been doing a great job. It's doing its thing and it's just running. So, I mean, this is also just a great chart for trading in general. So it's just going up and up, but this is really, really good for a DCA bot. So again, I share a really big watch list depending on the week, but with people in the Better Traders Club. So let me see where we are. Great. Okay. I need to, where is it? Oh, there we go. Awesome. Good. Okay. So, I'm at like the 23-minute marker, something like that. So I just want to spend a little bit of time answering questions. I think last time I was just like, there's too much stuff happening and I didn't get time to that. So, just looking at the chat, yeah, so Daryl Sanders says this price action is great for 3 commas grid bots. Yes, or any type of grid bot. So what he was talking about is when I was at the beginning, I was talking about BTC's price action. This is honestly an amazing little like market right here. So this is 30 days of 11%. This is really good for grid bots. It honestly is, because with grid bots, you want to focus on price action that's pretty much going sideways. That's in a really small range, not wild big ranges like this, Like I tend to stay away from anything that's over 30% for a grid bot, just because it's not as good. I try to stick to something that's around 10%. I just want it to be really tight, because that way the more activity it has, the more profitable the grid bot is. So yeah, I agree with you. Jonathan says, how could it go lower right now with 275 basis points hikes in front of us? Well, it depends, right? I mean, looking at things, they honestly just don't look good. So how could it go lower? Well, I mean, they're trying, the United States government is trying to reel in and take control of inflation by these small little basis, like these little basis point, or like 0.75 hikes. So I get it. Like you would think that, oh yeah, we should be saved. But really, this is just a gross, terrible looking chart. I mean, nothing looks attractive to me at all about a chart like this. It doesn't look bullish. It doesn't look positive at all. It just looks massive and bearish. So it makes sense, because the trend is pointing down even without the TBO. It makes sense to be heading towards this or even this. And it's honestly not that far away. I mean, that's just another 8%. This is another, what, 12%? Some people are even saying like, well, we could even fall back down here to our COVID lows, which would be another 40% drop. I mean, it's crazy. So how could it go lower? Well, if Jerome Powell decides to just do these weak little hikes, it's going to create a false sense that we've bottomed, which we haven't. And if they print more money, well, that's actually going to do the opposite, of course. Printing more money will mean that the price, or rather the S&P and all stocks, will go up higher, but it'll be short-lived. I think we saw our top right here. I could be wrong, but there's a lot of bearish sentiment worldwide. A lot of currencies and economies are tanking and crashing. We're seeing extreme inflation in energy costs in Europe. I mean, that doesn't just happen randomly, and it's not because of COVID. It's not. It's because of the war happening with Russia. So let's talk about like the ultra happy outcome. The ultra happy outcome that would reverse everything and not make things so bearish is that if Russia decided today, whoops, sorry everybody, our bad, we're just gonna backpedal out of Ukraine, you can keep it, we're sorry everyone, sorry, oops, sorry, and then that's it. Which, let's be honest, that's very unlikely. And I don't even know how that war is going to end, and I hope it does soon. I would love to see that. But that would be something to make the markets very happy and bullish again, because sanctions would be lifted off of Russia. They would resume the supply chain for natural gas to Europe. So that would take a lot of the stress off of the markets, and we would see everything start to rebound. Do I think it's going to happen? I'm praying for it to happen. I don't know. So anyway, so how could it go lower? There's nothing really to tell it to go up higher, in my opinion, from what I'm seeing. Nothing really says like, this is amazing. What a great opportunity. We're not in this anymore. It's very different. Okay. So one good point that I heard during the Future Blockchain Summit on a trading panel with that I was on with Gareth Soloway and a German banker and trader called Florian Grumes. I think that's how you say his name. Grumes? I'll get it. But he was saying that the problem with the market is that everyone has been used to a market that's been moving up and to the right for the last 40 years, which is right. I mean, it has. Like for 40 years, it's just been going up and to the right. And we've only had like a couple of stalling moments, but from what, 68 to 80, so 12 years, it was just doing absolutely nothing. It's going sideways. And there was a lot of friction. There was a lot, inflation had to be reined in. At that time, Volcker, I believe, made his infamous just rose in like the interest rate up to like 15%, something like that. and that corrected it, and that kept inflation under control. And then the markets roared higher. So now we're at this point where it's like, how do we reconcile this? Because I've only been alive in an up only market. I've been trading in an up only market. So it's easy to trade, but it seems to me like look at the TBO. Okay. Honestly, the whole point of this thing is to tell you when a trend might be changing, right? So what we have here is that we have this blue dot that's telling us close your long or take some profits. We saw this happen back here in March for the Corona crash. And of course it can keep going up higher. So yes, we could say the same thing. Oh yeah, sure. So same thing, we could go higher, but typically this signals that a trend change could be coming. Note the degree that note the degree that this is starting to curl down. When we see the fast line starting to curl down that much, that's typically not a bullish sign. For any time we see that, like back here, note the date, 2008. So this is our financial crash. Note the TBO fast line, it's curling down. And then the market crashed crazy hard. It fell 48%. Same thing here. We see it curling down, the dot-com bubble. So I get it. And I mean, here's a close long, and the market kept going up. But the difference now is that if we look again at the fast line for the TBO, it's not just taking a little bit of a dump, it's really curving down. So this is why I'm not feeling too bullish. It's not the most exciting thing to admit or talk about. So, I mean, a drop down here, 40%, would wipe out all markets. That would be the great reset that we don't want to see. I don't know if we're going to see a reset that harsh. And I hope we don't, because that's going to really destroy a lot of people's finances, and it's going to be bad if that happens. So, all right. Just looking at the chat. Okay, great. So, yeah, a lot of currencies are suffering right now, and it's no good. It's really frustrating. So I think the big thing to take away from this is that it's important to protect your portfolio at all costs. It's important to be satisfied with any amount of profit. Things that I talk about here in the Better Traders Journal that's taught in the courses on the bettertraders.com. So the way that I'm approaching the markets right now is just kind of wait and see. I'm not in a rush to trade. I'm not in a rush to open a position. I'm going to wait for a good setup, and a setup that looks like it will be profitable. I'm not just going to trade just for the sake of trading. That doesn't make sense. I want to be careful with my portfolio and protect it, because that's what a good trader does. So, yeah, stay tuned for more videos about my trip to Dubai last week. I have a vlog coming out tomorrow where I'm just kind of like walking around Dubai and showing pictures and videos and all that stuff of the crazy trip that we had. So again, it was really nice hanging out with you guys. So until the next time, you know what to do. Stay awesome and stay in the